Our market monitor guest tonight says despite the highs and lows in the market, he is maintaining his 1,700 target on the S&P 500. And here to tell us why is Rich Steinberg, President and Chief Investment Officer of Steinberg Global Asset Management. Why shouldn't I be frightened this week, Rich? It was pretty ugly out there.
Yeah, listen, Tyler, we have to keep it in perspective. The market's had a big run. This was a 2% pullback. I think it feels a little bit more jumpy because investors were getting greedy. They were moving money out of bonds and into stocks because they saw their bonds going down for the first time in 10 plus years. So you have some people that put money into the market and then said, oh, maybe I made a mistake. So this is all part of the process. The market will settle in here. 1,700 would be roughly 15.5 times our $110 target.
All right. Let's turn to some of the viewer questions, Rich. We have Michael from Berkeley, California, wanting to get your views on Salesforce.com. What do you think?
Well, this is a classic stock that you have to differentiate between a great company and a great product and a great stock. Great company, not a great stock, trading at 138 times earnings of this year's earnings. The company has made some pretty aggressive acquisitions that may not pan out. Insiders are selling. It's a stock that really wouldn't fit our criteria.
138 times earnings. A lot has got to go well. Bruce L. owns shares of American Electric Power and wants to know your position on that one, AEP.
AEP is a utility based in Columbus, Ohio. Really well-run company. The issue is with the 10-year at over 2.8%, utilities are out of favor. It yields 4.5%. Really well-run company. Probably a name you could own, but you got to realize that there's going to be some wind in your face with interest rates. You could buy it at lower levels, but probably not right now.
Let's turn now to some of your own recommendation stocks that you are putting in your portfolios. The first one on the list, National Oil Well Varco, NOV. Why do you like it?
This is a really well-run company. They're in the equipment business for drilling in both oil and natural gas. The stock's trading at under 12 times next year's earnings. They have a great backlog, and we have an $85 target, so it fits our growth at a reasonable price. You're basically being able to buy a growth company at really value prices.
So let's move back to a question on the market. At 1655 today, how close are we to that point where you might be adding to your equity positions if you think we're going to end the year at something in the neighborhood of 1,700, maybe a little higher?
We've had a lot of cash come in with new money, as well as we got defensive as our stocks reach targets. And actually today, specifically in our dividend and our ETF models, we started to nibble at stocks here, Tyler, as an entry point to ease in maybe again at the 1625 level. And again, we think that there's decent valuation support at 1600. We could be in a trading range of 1600 to 1700. It gives us pretty good entry points on names that we want to own here.
So what do you think investors should do, individual investors?
Well, I think it depends on their asset allocation. If you're a bond investor, you have to reduce your risk. The analogy that I would give you is like the old-fashioned Muhammad Ali rope-a-dope. Get in the corner, have cash around, take your punches, and then come out swinging as rates go up to a level where you can use that income to live your lifestyle. For equities, really think about in 2008, and in bad markets, how you felt about your overexposure to equities, and just make sure that you're in balance. If you have cash, don't let frightening weeks like this where you're down 2% take you off your game. Have a strategy to put money to work at levels that you think are reasonable. That's what we did today.
Final quick question. One sector that you love, one sector that you loathe right now.
Well, a sector that we don't have enough exposure to right now that I think we're going to love soon will be Europe. Looks like they're just coming out of recession. It's kind of a wait and see. Germany's numbers were good this week. France numbers were good. So we're starting to look at European names again for the first time since '08. And I think you have to be underweight utilities. Everybody wants to own dividend stocks. In our dividend portfolio, we're way underweight the utility sector. And I think it's an area that you really have to be careful of and wait till yields come your way.
Do you guys own any of the stocks we mentioned? I guess we know you own Oil Well Varco and the financial, but how about any of the others?
We do not own the other two.
All right, Rich.
And I don't own any of them personally.
Fantastic. Rich, thank you for a very helpful conversation. Rich Steinberg of Steinberg Global Asset Management.